Hi guys, welcome back to Forbes Flash. Thanks for joining us. Let's start with some of the biggest stories that you should know. Sears Holdings filed for bankruptcy this week, with that ending the reign of iconic Sears and Kmart in the process. Much has been said about the demise of an iconic retailer, but another more interesting conversation is happening simultaneously. What's going to happen to all those stores? I mean, the physical locations where stores will no longer exist. Sears has shed thousands of locations in recent years, so real estate firms have been busy redeveloping the most prime properties into apartments. Other sites might become offices, restaurants, or specialty stores, depending on community demand. But it's not 100% over for those of you devastated by this news. Around 500 sites will continue to operate as Kmart or Sears stores as the company attempts to restructure. The good news keeps coming for A Star is Born. The Warner Bros. And MGM flick passed $100 million in earnings in just 12 days. With a budget of only $36 million, the film's earned 3 times that in North America alone, and even more when you factor in earnings overseas. And the Lady Gaga/Bradley Cooper remake is now firmly in the running for the Oscars. One might even say it's a Best Picture frontrunner, along with a probable nod for Lady Gaga as Best Actress. Seriously, what can't she do? Also in the news this week, Netflix, as the company released quarterly results that obliterated forecasts. The solid growth was a relief, after disappointing second quarter numbers in July sent the stock into a tailspin. Not the case this week, as shares rose 14% in after-hours trading after the results were released Tuesday. One of the most notable announcements, an add of nearly 7 million subscribers in the September quarter, a 31% increase from the same measurement a year ago. Netflix's total streaming membership now exceeds 130 million. Binge on, my friends. Speaking of millions, boxer Saul Canelo Alvarez scored one of the biggest paydays in the history of sports this week as he signed a $365 million deal with sports streaming service DAZN. It includes 11 fights over the next 5 years, with an average of $33 million per fight. Alvarez will kick off the deal this December at Madison Square Garden against Rock Fielding. Along with the initial fights in the deal and endorsements, he's set up to bank at least $120 million in the next year alone. Not bad, huh? That number would surely help him land at the top of our world's highest paid athletes list next year. Maybe you celebrated National Boss Day this week as a manager, or you celebrated your own leader, but there was a lot of talk about what it means to be a boss this week. Cue our next tip, how to go from being a good one to a great one. First and foremost, listen. Good bosses focus a lot of energy on communication. Next, adapt. Be able to recognize how your work style connects with your teams. Maybe adjust to make sure they're comfortable. If they're successful, so are you. Last but not least, don't fear failure. Set your team up to be willing to take risks and explore creative solutions. Sad news this week, as Microsoft co-founder Paul Allen passed away from complications related to non-Hodgkin's lymphoma. Far more than having a profound impact on the tech industry, Allen was also the owner of 3 major sports teams and an avid philanthropist. He gave to projects he thought would make a long-term difference in the world, to the tune of $2.6 billion in lifetime giving. One of his most notable philanthropic enterprises was the $500 million Allen Institute for Brain Science, founded in 2003 with the mission to understand humankind's most complex organ, one Allen was fascinated with. He also gave $240 million to found what is now the Museum of Pop Culture, $100 million to fight Ebola, and $26 million to Washington State University, the alma mater he dropped out of. Numbers aside, he leaves behind a legacy of immense impact. Marijuana was officially legalized in Canada as of this week, making it the second nation in the world to do so. What does this mean for investors looking to capitalize on the fallout? Tread carefully, because even though this is a major step for cannabis companies, there are still many unknowns that will surely emerge in the next few years. Compare the current landscape to that of the dot-com era of the late 90s and early 2000s. Just as companies back then could add a dot-com and suddenly they were worth millions, something similar is happening with marijuana firms. If a company aligns with cannabis, it's attracting capital. But are they simply early adapters, or are they truly prepared to generate profit? Moral of the story, the cannabis industry is certainly promising, but legalization in Canada is just the first step. The entire US joining the wave is the next one to look out for.
If you're involved with the stock market, or if you're just aware of the news going on, October has been a rough month for stocks so far. That is in line with its historical reputation, but not its accurate historical record. Actually, October over the years, since 1950 for the Dow Jones Industrial Average, is up on average 0.70%. That's one of the best months of the year. The worst month of the year to be invested in the stock market is September, with an average return since 1950 of just 0.07%. And then not far behind is August. Those are pretty rough patches. But anyway, there are headlines in the past that have given October its bad reputation, very well-deserved one. But more often than not, October is a bullish springboard for what's called the best 6 months of the year. The Stock Trader's Almanac, starting in 1986, under Yale Hirsch, started writing about this, the tendency of November through April to outperform the months of May through October. So they did a study going back to 1950, and it's updated every year in the Stock Trader's Almanac. Jeff Hirsch let me look at it. Imagine two people, both with $10,000 in 1950. One guy is invested every year in the stock market from November through April. He's in cash the rest of the year. His buddy does just the opposite. He puts his money in at the end of April, so May through October. After 68 years of time through 2018, the guy who had done the best 6-month period has over $1 million in gains. The guy who did it the other way around, investing only in the worst 6 months, has $1,000 of gains on $10,000 after 68 years. You might want to look at stocks for your portfolio that did very well this earnings season, but still fell despite the fact that they did well. One company I like is Fastenal. They're the biggest distributor of screws and nuts and bolts and other kinds of fasteners. And they delivered a report that showed they topped analysts' expectation for revenue and profits, but the stock was still down because gross margins and higher costs were threatening to eat into the future profits of the company. So what I'd like to do is, in this environment, look and see if there is a panic situation. And there's one thing called the put-call ratio. The put-call ratio measures the amount of premium people are willing to pay for put options. It measures how bearish and scared they are. And historically, when this cluster is, when it's really crowded in there and people are all scared, the thing to do is not be scared. Market technicians can use this put-call ratio. When it gets above 1 on the S&P 500 index, it tends to be a good time to buy 1 month hence in stocks. Right now we're at 1.17, so it's getting up there. Maybe not panic buying yet, but the bottom line is October usually provides a bullish springboard from which you can ride the best 6 months, which are just around the corner.
Thanks for tuning in. Share your feedback using #ForbesFlash, and we'll see you next week. I'll be back with more updates for you.